Hello everyone, today's topic of discussion is Silicon Valley Bank's collapse. On 10th of March 2023, one of the largest US banks, Silicon Valley Bank, collapsed, failing to meet its financial obligation to its creditors and depositors. This is said to be the biggest bank failure since the 2008 banking crisis. Now, what caused Silicon Valley banks to collapse? Firstly, Silicon Valley Bank had invested in long-term government bonds. But after the US Federal Reserve increased interest rates, the value of the bonds fell by $15 billion because they paid lower interest rates than comparable bonds issued in today's higher interest rate environment. Secondly, during the same period, Silicon Valley Bank deposits dropped by $20 billion in just 3 quarters. Silicon Valley Bank's customers are typically tech startups who were finding it difficult to obtain loans at reasonable rates. So, they began to withdraw their deposits from the bank. To provide customers with their money, Silicon Valley Bank had to sell their long-term bonds before their maturity date, resulting in a loss of $21 billion. This caused panic among the bank's investors, including venture capitalists such as the Peter Thiel Fund, Coatue Management, and Union Square Ventures, who began withdrawing their investments from the bank. Ultimately, this led to the collapse of Silicon Valley Bank. Now, what are the consequences? Many startups and venture capital firms rely on Silicon Valley Bank for financing, banking services, and other support. The fall of Silicon Valley Bank will disrupt the flow of capital to these companies and potentially cause them to fail. Silicon Valley Bank is a major player in the tech industry, and its failure will cause a ripple effect throughout the industry and the broader economy. Silicon Valley Bank's collapse will trigger a broader financial crisis in the tech industry and beyond, similar to the collapse of Lehman Brothers in 2008. The collapse of Silicon Valley Bank can damage investor confidence and lead to a downturn in the stock market. Silicon Valley Bank plays a critical role in financing and supporting many innovative and high-growth tech startups. Without access to financing and other services provided by Silicon Valley Bank, these companies may struggle to continue to innovate and grow, potentially leading to a reduction in innovation and growth and a loss of jobs and economic activity. Now let us discuss the effect of Silicon Valley Bank's collapse on India. Indian banks were not invested in Silicon Valley Bank, and Silicon Valley Bank did not have any of its portfolio in any Indian bank. This means that Indian banks are not directly exposed to any financial risk related to the collapse of Silicon Valley Bank. Next is, Indian banks are well regulated and supervised by the Reserve Bank of India, which has implemented various measures to ensure the stability and safety of the Indian banking system. These regulations and measures make Indian banks relatively insulated and better equipped to handle any potential shocks or disruptions in the financial sector. The main damage is to the Indian startups that had invested in Silicon Valley Bank, as it is estimated that they have collectively lost around $1 million. The collapse of Silicon Valley Bank may impact the sentiment of global financial markets in the short to medium term, as it could be perceived as a negative development for the technology industry and investor confidence. However, it is unlikely to have a significant impact on Indian equity markets in the long term. The venture capitalists and other investors may become more cautious and risk-averse, which would make it harder for startups in India to acquire the investment they need to establish and scale their businesses. However, this will be temporary and the ecosystem will rebound as investor confidence returns. To conclude, the failure of Silicon Valley Bank could have a significant impact on the economy and tech sector due to policymakers' action of printing money and raising interest rates without considering financial stability. India should take steps to prevent similar crises by developing a risk monitoring framework and avoiding burdening taxpayers in the event of a bank failure. I hope you like this video. Thank you for watching. Comment below what are your opinion on this topic and don't forget to subscribe this channel for more hot topics like this.